Hello, everyone, and welcome to the Small Cap Insights podcast powered by Darrow Associates, a leading and full service investor relations firm that's primarily focused on micro and small cap entities. My name is Alex O'Toole, and today I am joined by Nicholas Sosiak, the Chief Financial Officer at Cannara Biotech, which is traded on the Toronto Stock Exchange under the ticker LOVE and the OTCQX under LOVFF. Nick, thank you for joining me today.
Thank you for having me, Alex.
My pleasure. So for starters, tell me just a little bit about Cannara Biotech and what makes you guys stand out.
Absolutely. We're a Canadian-based licensed producer of cannabis. We're based in Quebec, which is one of the eastern provinces here in Canada. And why Quebec is because Quebec has the lowest cost of electricity and most favorable labor costs in the country for us. And that so happens also to be 70% of the cost of inputting the cost to cultivate a gram of cannabis. So we have a great economy here, and Cannara has two mega facilities. Our first facility was acquired in 2019 in Quebec, Farnham, and it's 625,000 square feet. 470,000 square feet is leased out to long-term tenants, and then about 200,000 square feet is cannabis operations. But in 2021, we were the lucky acquirers of our Valleyfield facility, which is a purpose-built cannabis facility with over $250 million spent in building out the facility. And we bought it for $27 million back then. So we got a huge deal, and we have the ability to scale now up to 100,000 kilograms of cannabis. We're at 50,000 kilograms today, and we're across the country, selling from Quebec all the way to BC. We operate three brands: Nugs, Tribal, and Orchid, and we grow everything we produce from the seed all the way to the sale. And in Canada, for cannabis sales, we actually sell to the government. So our client, our customer, is the provincial governments. And so the only thing that we don't control is the retail, and that's what Cannara essentially is. We've been working 7 years on this project and building out a team of over 450 employees as of today. The CEO is the original founder, and still today is our master grower. He's in the facility. He has a passion for growing cannabis, but he built that passion primarily through this venture where, large scale cannabis cultivation, there's no experienced company out there or producer that could give us that intellectual property or that information on how to scale up cannabis. Quality cannabis is important because you can scale cannabis, but scaling a quality is extremely hard. And that's where we rolled up our sleeves, and the CEO is hands-on every day in the garden. We have 24 rooms, 25,000 square feet. So we're improving that on the CEO's hands-on on the asset front. I'm the CFO. Been with the company since 2019 as well, and I'm also the chief product tester and developer. I do all the products. I create all the products. My passion is cannabis. But so I'm able to create products, but also have to cost them and make sure that we're earning our gross margin that we need. Last quarter, we're at 44% gross margin. So essentially, that's where we are. That's what Cannara is, a licensed producer of cannabis focused on our brands. Three brands. We're at over $120 million of sales. We have the capacity to go to $300 million of sales over the next 4 years, and that's the objective: is heads down, continue investing in our Valleyfield facility, building it out, and dominating Canada as being the number one licensed producer here in Canada.
Fantastic. So you touched on a lot of stuff there. It's also so wonderful when you're able to kind of turn your passion into what it is that you do and really
Absolutely.
scale that out and kind of introduce more people to it because it can be, an industry that people get a little bit overwhelmed. Like they don't really know how to kind of get into it. So it's really nice that everybody, it seems, that's involved, really it's their passion and it goes kind of from soup to nuts. One of the things that you touched on here was your production facilities, right? And you guys have built over 1.6 million square feet of production capacity. You control, as you said, the process from cultivation to the finished product. So how does that scale and integration translate into the margins and the pricing power that a, smaller or a less integrated competitor isn't really able to match.
In cannabis, the only way to make money is economies of scale. Even 100,000 square footer, you're breaking even, especially in Canada with the conditions. So you really need to build economies of scale. Um, at the same time you're doing that, scaling cannabis, as I said in my intro, scaling cannabis is extremely hard. It's not been done before properly, consistently. Um, because the end consumer of cannabis is extremely quality focused, price focused and quality focused. So unless you're playing in the value based segment of the market, you can focus on price. But otherwise, you need to focus on quality. So scaling quality cannabis is extremely hard, and having a purpose-built facility, where every bell and whistle is invested into this facility is what allows us to achieve the quality at scale that we have. Usually greenhouses are big open greenhouse, 600,000 square feet with rows and rows and rows of plants. But it works in growing tomatoes and lettuce where you have one genetic, two varieties of tomatoes or lettuces or whatever it is. But in our world, the customer wants a new genetic every 3 to 6 months. And if you're not innovating and finding that genetic, then you're not you fall behind in your brands and ultimately your sales. So you need all that to say is that you need separated rooms. You need a greenhouse that's separated into compartments where you can grow different varietals and keep it within a scale that's manageable for that varietal. Because every varietal needs different light, different nutrients, different water, different that. So you need a manageable size. So even though we have 600,000 square feet, we have 24 rooms divided into 25,000 square feet. So each grow is 25,000 square feet of us, but we have them right next to each other 24 times. So that's how we're able to scale right now. Today we're at 12, room 12. We scaled from when we bought it to today, room to 12 rooms. And over the next 3, 4 years is the next 12 rooms. So we've proven out that we can scale, we can grow, we can find genetics and build it out. And then the next 3, 4 years is finding the rest of the uncovered genetics and building out the operation. But the key, I say genetics a lot. Key is it is genetics in our world. To find, there's no store, there's no supplier that you can find genetics that guarantee you the flavor you're looking for, the yield that you're looking for, the resistance that you're looking for. It hasn't been done because once cannabis legalized, everyone focused on producing cannabis and didn't focus on research and development on the different types of genetics. And there's thousands and thousands of genetics. And to find again the genetic, it takes me 18 months and millions of dollars to find one genetic in our current model. So you need that time to be able to scale properly, and to take care of your brands so that they scale properly and compound revenue rather than just exchange revenue for one for one.
Yeah, so you touched on a bunch of different things there, including being able to provide that, premium quality and also the price point. So, how is it that you are able to kind of make that happen, that premium quality at an affordable price point? Because obviously that is a more compelling consumer proposition. And executing it, though, does require a lot of discipline across the entire business. So, how is it that you maintain that positioning? And what does your kind of go-to market strategy look like within those regulatory constraints that the Canadian cannabis companies may be facing? I know you said you guys obviously work with the Canadian government as one of your contractors, but how does that kind of all marry together?
Yeah, I think Quebec is our secret sauce. Being in Quebec, like I said at the my intro again, is 70% of a cost of the gram is electricity and labor. So we're able to keep those costs down. Um, we acquired a facility that's over 250 built for over $250 million for $27 million. So just the carrying cost alone on that facility, if I were to build it today, it would cost me over 300 million, and the debt and interest to carry a $300 million loan would cripple any company. So we were lucky and fortunate to have that deal, and then we're able to now build that infrastructure and pass it down to ultimately the consumer. through a really good price point, but ultimately always making sure we're maintaining quality. And that's why we're really hands-on. And that's why we're in it every day and innovating and making sure that we do not let go of the quality as we scale. And that's the value proposition that's winning across all three of our brands. We right now we only sell to the Canadian government. The Canadian government is split into provincial governments. So I have a client, Quebec is one of my clients, Ontario is one of my clients, BC, Alberta. So what they ultimately, as a government entity, what they ultimately want to do is two sides. One, they ultimately want to cater to the market that they're trying to cater to, which is the cannabis market, the consumers. So they want to make sure that they're launching products and they're always staying relevant. So they build processes to every 3 months, if some provinces are every month, where they accept new products, but they gatekeep those products. So as a company, as a licensed producer, we have to build those relationships, build our innovation pipeline, and then sell that innovation pipeline, not to the end after the end consumer, but before that, we have to sell it to the government, right? And then sell them the idea that this product is consumers will like it, um, and that they sell it, right? The second thing that they care about is consistency. They're not out there to try to you know, cut down the cost or find the next better supplier to build the same thing, right? They want consistency. If the product works in market, the consumers like it, they want that volume to continue, and then they want more products like that to continue. So as a Canadian licensed producer, we have to focus on these government entities and make sure that we're always innovating for them, that we're always there for them, which is part in why we haven't expanded really too much into international. Canada is the hub for international. Most of my competitors are selling a significant portion of the volume that they cultivate here in Canada internationally because you get more per gram. But we have to think of being there for the government, right? And being there and catering to their orders. So we've taken the approach to focus on the Canadian government, focus on our provincial clients, and make sure they're well catered, and then slowly start branching off and understanding internationally. And then eventually, once we hit our target in Canada and have fully deployed in Canada, then we start looking into international markets.
Do you have a timeline kind of that you foresee that happening, particularly we'll say with the US where you guys are already being traded, over the counter? Is that kind of the next place that you see yourselves going? And what is the timeline that I mean, obviously you can't really look into a crystal ball 100%, but if you could, what is your ideal kind of timeline that you'd be looking at for that?
Yeah, with the US, well, when we don't anything could happen with them. So we're just we're on the sidelines, and there's no um, timeline per se for them. When that market opens, we'll be there. For us, Canada is a 3 to 4 year project. A 3 to 4 year project where we double the growth of the company. We've really created a platform, $300 million, 45% gross margins, 25 to 30% EBITDA, 20 to 25% cash flow from government paying entities every 30 days is a great place to be. And that creates an opportunity that then we can scale into other markets, medical side of cannabis, the US. So 3 to 4 years is our timeline to branch, like call it the next phase of Cannara. The first phase is really dominate Canada and branch out to understand what are the next phases, like opportunity for Cannara, and then in 3 to 4 years we deploy phase two.
And like you said, those numbers are kind of speaking for themselves. And obviously, in the States, there are currently a little bit of, federal things that might make it a little bit more difficult. So, scale wise, that timeline does make a lot of sense. So, as far as your growth story goes, is it primarily about optimizing what it is that you guys have already built, or is there a meaningful portion of that external component? I know you said, you've gotten into 12 of those rooms. You have, obviously, you can go up to 24. How do you think about, those new product categories, any geographical expansions, M&A, any different capital allocation that you're kind of looking at across those different options?
Yeah, so I think the next 3, 4 years, like we have the cultivation down pack. It's about building out the next 12 rooms. Um, Genetics is key because if you keep hunting genetics and genetics that stand the test of time and people like, then they'll keep buying that genetic and then they'll take your next genetic, right? Product categories, absolutely. We really don't play significant amount in large pack flower. Our main band tribal is still 3.5 flower. So we still have a huge opportunity to sell, ounces, 14 grams, 7 grams. We don't have a big presence in the all-in-one category. We're launching all-in-ones. We just launched diamond infused flavor bombs for nugs, and that's turned out to be the top three selling product in Ontario, and we're building off that. So yeah, definitely product expansion, innovation. We like to see ourselves as the forefront in innovation and the trendsetters. So definitely continue building that out. Then it's the sales and marketing side, which is distribution, making sure that we have those distribution with the way the retail market works because it's not controlled by the government. Um, Shelf space matters, right? Then there's so many products and a retailer has to choose their assortment. So if you're not always letting them know what's available, what products are launching, when they're launching, doing a launch campaign, it's hard for them to understand that your product's available. So, we're very lean in our sales team across the country been like that, and it's just slowly building that, taking the time to build those funnels, build those pipelines, distribution, um, working on deals with retailers to synergize where they sell more of our product and we help them obtain their objective is definitely like as long as we stay true to what we do, which is create great product at a great price. Um, it's a $7 billion industry, so we will sell our product. And then M&A, where it's hard to move or do a deal after a 10 cent on the dollar deal like we did with the Valleyfield facility. So everything over 10 cents or 10% of the actual fair value feels like a bad deal for us. So um, we're there, we're looking where we have what's cool about us and for investors is like the story of doubling of what we're doing and the numbers that I gave is like that is already the foundation's laid out. Like we have the assets. It just takes time and the people and the effort. So look at the management team, look at what we've done, look at the people, look at the feedback in market and about Cannara, and make the judgment if we can build the next phase of growth for Cannara. So everything is there built in place. Like we don't have to expand and promise and do mergers and acquisitions to double our thing. But look, we're opportunistic. We're always opportunistic. We have 3 brands that are generating, that I still see runway all the way up to $300 million. Not many cannabis companies have that kind of revenue with only 3 brands. Usually it's a variety of brands. So do we come at a point where we see we need to acquire another brand or a synergistic brand that helps move the volume quicker or more? Then we could be, but always at a great price.
So it sounds like you are definitely hitting it from every angle, very much a yes and as far as, product expansion, all those different things. And you kind of touched on a little bit of the investor side and what it is that those people can look for, because obviously the cannabis sector has been a place where people are a little bit more skeptical or difficult. So what would you say? What would be your elevator pitch to a more skeptical generalist who's never owned cannabis stock or invested in this space about what it is that makes you so different? If you had a quick elevator pitch, how is it that you would get somebody that's never come in to say, you know what, I think I want to do it, and these are the guys I want to do it with?
Yeah, I think the time for investing in cannabis is now. Value investors are flocking. This the period that I have the most value investors is coming to us and trying to understand the story because again, it's a $7 billion industry and there's right now you could look at a list of 10 companies and 3 or 4, 5 of those companies are going to own 80% of that market. Like it's the evidence is there. So now looking at what we have Look at what we built up to. We're the most diligent built company. We have no history. We're in retained earnings. We're the only company in retained earnings. So we have a track record. We're the same management that we were in 2019 that we are today. We have the same focus. And if we built what we built in the past 6 years, the learning curve that we've been through, the assets that we didn't have, the people that we didn't have, why can't we do that for the next 3, 4 years as well? And even better.
Yeah. And the contracts, that you've already have in place and the facilities that you already have in place that you're still already
The
looking
whole
to.
foundation is laid out there. It's just expanding, we've proven every quarter I've expanded market share quarter over quarter.
Yeah.
So if you just take that same trend and just keep building it out and understanding, of course, there's going to be blips and here's and there's, but we know what we're doing, and it's time, and we have the assets, we have the people, we have the strategy, and it's just deploying it.
Yeah, the proof is very much in the pudding, it seems already. And it has been wonderful hearing about your company. It sounds like it's a super exciting time to be getting involved. And I want to be mindful of the time here, but uh, before I let you go, is there anything that you think I've missed, anything that you'd like to touch on at all?
I Look, I think it's like I said just right now, it's time for investors to look at the cannabis industry if you're willing to take a serious hard look. I know a lot of investors got hurt. There was a lot of noise. I was confused back then too as well. So I could imagine any investors looking at the industry back then. But there's a lot more clarity. It's a real industry. It's government backed. And Cannara, like we're be, over 50% of the ownership is between our C-suite and our board of directors. So the alignment for success couldn't be more aligned for shareholders that want to come into the story. And we've proven that out for the past 6 years. Like it's our 20th consecutive quarter of profitability. And we're not rushing it. And that's what's important, right? Like if you're a type of investor looking for overnight, tripling and crazy stuff, that's not going to happen. But that consistent, steady growth of a real company, a real operating platform in a new industry that just starting to become, we're that horse.
Yeah. And it sounds like a good horse to bet on, between the quarter over next growth, that government component, that government back component, I think really is something that's undeniable and speaks greatly to the company it is that you guys have built and are continuing to build. And I wish you guys the best of luck. So, Nick, thank you again for making the time, and thank you all for listening. Again, this is Nick Sosiak from Cannara Biotech. You can find them on the Toronto Stock Exchange under the ticker LOVE and OTCQX under LOVFF. This has been Small Cap Insights Podcast powered by Darrow Associates, and I am your host, Alex O'Toole. I'll see you all again next time.